Sense as to where the money is coming from?
Look, really, really consistent and clear trend. Crypto investing is here to stay. There's a phrase I really like that's look into my portfolio and gaze into my soul. And if we look at people's portfolios, what we're seeing, gold products, 20 billion in outflows over the last 2 quarters, crypto products, 7 billion in inflows over the last 2 consecutive quarters. This is a real trend. Capital is floating out of traditional alternatives and diversifiers like gold into Bitcoin. I think Q2, we've just kicked off the quarter, but already the numbers continue to show that trend accelerating.
How do you think about the new products that are coming on the market, ETFs, the companies that are filing for ETFs? Will that dampen volatility in Bitcoin with more and more entry points, more and more on-ramps, so to speak, into the market?
Yeah, it's really been interesting to see, historically the banks shunned us, which is why the crypto ecosystem really developed for its first 5 years outside of the traditional financial system. Now, as we've seen over the last few months, JP Morgan, Morgan Stanley, Goldman Sachs, BlackRock, you name it, all of the world's largest asset managers and financial institutions are looking to begin offering Bitcoin and crypto investment products to their clients. However, at this point, as we've seen at CoinShares, we publicly listed in March. Coinbase is publicly listing next week. There are now a number of avenues through which investors are getting exposure to cryptocurrencies, either directly through structured products. I mean, the numbers Coinbase posted for their Q1, 1.5 billion in EBITDA in the last quarter. If they continue that, they'll be larger than every single US exchange in terms of volume and earnings. That's a pretty phenomenal accomplishment. So to me, it's sort of shocking that banks aren't moving more quickly. And it's a question to see, can traditional financial services catch up with crypto financial institutions? At CoinShares, we say probably not so fast and maybe not ever. We'll see.
And I'll ask you a question to that point, and you may or may not be able to answer, but I know you can answer, Meltem, just because of all the conversations we've had in the past. When investors are thinking about Coinbase and they've read the filing and they see that the volatility is going to be much tied to Bitcoin, they then ask themselves, why don't I put $1 into Bitcoin as opposed to $1 into a Coinbase, particularly when Bitcoin, the correlation between Bitcoin and a lot of other altcoins are so high at this point. It's really a bet on Bitcoin at this point in time. What do you think?
Yeah, absolutely. Look, one trend we track closely in the industry, cryptocurrencies now over $2 trillion market in aggregate. Of that, Bitcoin is still 55%, Ethereum is about 12%. So as you alluded to, a lot of things in the crypto space have a beta of 1 to Bitcoin, right? They're closely correlated. And one of the key questions in terms of exposure is when you're buying a crypto equity, right, exposure to a company, are you really buying exposure to the underlying asset? What's been interesting to observe as crypto companies get more integrated into the normal financial services sector is some of that volatility is going away because some of these offerings are not always directly tied to revenues and to prices. They're really tied to transaction volumes or increased activity in the crypto sphere. So I think over time that relationship will continue to decline. And Bitcoin's volatility, in our view, is part of the price of opportunity. I continue to believe allocating to both the assets themselves as well as some of the companies emerging in the space will continue to be an attractive value proposition. And over time, those two probably will begin to diverge more. But we're still in the early innings, and there is, as you noted, still a high degree of correlation.
I'm glad that you mentioned the volatility in Bitcoin and the opportunity there, because one bank that shunned Bitcoin early on, JP Morgan, they actually have an analyst now that follows cryptocurrency, and that analyst basically said that once the volatility of Bitcoin reaches to the volatility of gold approximately, that's when institutions won't be scared to get in. But at that point, in a world in which Bitcoin and gold have the same volatility, Meltem, are the best days of Bitcoin behind it?
I actually think that's not the case. One of the things I think is so interesting is when people analogize Bitcoin to gold, calling it digital gold. That's been a popular and persistent narrative, but I'd really like to kill that narrative. Bitcoin is not digital gold. Gold is a shiny rock. Bitcoin is not a shiny rock. And I say that in the bluntest way possible. Bitcoin is not only an asset, but it's a building block for a new type of financial infrastructure that's global in nature, can bring a lot of of liquidity and connectivity to markets. We're seeing this with the tremendous explosion of activity in the decentralized finance space. And so I think it's fundamentally different than gold. Bitcoin's potential, in my view, is much greater than gold's $9 trillion market cap. So I don't want to constrain Bitcoin to the gold narrative. They're two very different things.